Hi guys, and welcome to our new video series where we delve into the art of achieving double-digit returns through strategic day trading. I'm Atanas, and for those of you who don't know, I'm the founder of CalibriTrader.com, and you can find some links below. And I'll be here to guide you through the exciting journey in which our goal is to release at least one video each month showcasing a trade that surpasses 1 to 10 risk to reward ratio, a benchmark we define as double digit trade in our day trading program. However, it is not uncommon for us to exceed these targets, so we have historically had months with 3, 4, 5, or even more double digit returning trades. So you won't be I wouldn't be surprised if I'm releasing multiple videos every month. In this series, we will not only highlight these high rewarding trades, but also provide insight into the methodologies and strategies behind them, from the intricacies of entering a risk-free trade to the psychological aspects of trading and the importance of not attempting to predict the markets, since it's simply not possible. Each video is crafted to enhance your understanding in day trading, and it will be suitable for beginners as well as very experienced traders. So if you're interested, stay tuned, and I will be showing you the first video of this series. See you in a bit, guys. All right, let's get started. So this will be the first trade of this series, even though I've already walked you through multiple trades that are exhibiting this same characteristic of being a double-digit trade, or a trade which is higher than 1 to 10 risk-to-reward ratio. Here we had a quick trade this morning, which was a 1 to 2 risk-to-reward trade. It was closed very quickly, but then the one that we closed earlier during the London session, this was a trade which gave us again 1 to 11 risk to reward ratio, and it is ticking this box, so it's a double digit trade by this standard. Let me just move back and explore where we started this trade. It was a couple of days long trade, so it's not just a day trade. Some of those trades that are actually quite profitable, they tend to last longer, and we have specific rules for that. But before I delve into that, let's just find where the trade was started, and this was right here. It was yesterday during the London Open, 8 o'clock in the morning. The trade was taken, and initially the stop loss on this trade was only 14 points, and this one day later it turned into a double-digit returning trade. Initially it was showing good signs, and just before the London Open, I decided to take profits and close this trade, even though it might have been slightly prematurely. But it's Friday, a lot of traders are taking profits today. I will be still trading the afternoon session. I usually trade the European and UK indices in the morning, or this is during the London Open, and I trade the US indices in the afternoon, which is coinciding with the New York Open. And so what helped us to basically stay in this trade for quite some time was the concept of timestamps, which I think I've mentioned earlier to you. But this basically is a way for me to see the price and actually ignore the price and just follow time as my leading factor. So I basically opened this trade during the London session yesterday. This was 8 o'clock my local time, and I was long, let's say, here, stop losses here. Then I will be looking for the next sessions open, which in this case will be the US Open. And during the US Open, the trade was exhibiting again profitability. It was in all the boxes that I'm looking for in general until the next trading session, which again I'm looking at the liquidity and the volatility of each session, and I'm usually not trading the Tokyo session or the Asian session. I'm moving back to the London session. So this trade was open throughout this time. It was exhibiting good profitability, and it was moving upwards. And then during today's session we also saw a new high, and I just wanted to secure myself, and since it's Friday, I closed this session. Not necessarily a very bad sign, which led me to close the trade, but there were some some factors that made me take profits on this trade, and currently excuse me, close the trade, even though it was going against me at this point. And again, after taking a trade, I usually stay very aside from the price. I'm looking at the time and time only, and this is the only way that you can actually stay with a profitable trade. If imagine the trade is against you, you're almost hitting your stop loss. If you don't believe in your strategy and you're not capable of staying aside of the price and look at the time only, then apparently you might close your trade at any point. Like, this is a very common habit for beginner traders. That's what we're eliminating in the day trading program by following those time rules. And so for instance, you're in a long trade, this is your stop loss, and the price is going in the right direction, exhibiting the right the right conditions, but then at some point the price starts going against you, and then it falls even further. So if your price is reaching your stop loss, or is getting very close to your stop loss, you will be thinking, I will be always better off booking small profits here than letting the price hit my stop loss. So in some cases this might be a good reasoning, but in most cases, the majority of cases, this leads to self-destructive behavior, and it leads to a lot of costly mistakes past the point of taking profits, because next thing you see is the price going higher, as we saw happening in the trading room. So you might start taking some smaller trades and being stopped out on a smaller retracement, or there's so many other things that can go wrong. Basically your imagination is your only limit, to be quite frank here. So that's why I prefer to keep it simple, and so this allows me to reach very high returns on some of the trades while I'm running a risk-free trade. So for me, this is literally a double win. I'll be sharing more of those trades, guys. I think this kind of depletes the topic on this particular trade. But then if you have some questions, you can just send me a question in the comment section below, or write me directly to admin@calibritrader.com. And I'll see you in the next video, guys. Bye.